Ray, you ready to quit on your Jags yet?
Oh my God. It's not good. So let's not talk about football. I'm done. I'm
Yeah.
absolutely done. That was brutal. I think at this point, something needs to change at the upper management, where we're done. I don't know. Too much talent on that team to be playing like that.
I don't know, man. I don't think there's as much talent as they're paying for, but that's just me. Hey, you're at the game
Okay,
and left at
well,
the fourth.
the Giants beat the Browns, so whatever, whatever. The
So
Bucks did not play good. Yep, the Bucks did not play good.
it's all rigged. Oh,
Wait, who
come on,
beat
Leanne. Don't be like that.
the Bucks? Lost to the winless Broncos. So yeah, it's interesting. It's been an interesting season so far. And Jose, don't act like the Rams.
Hey, hey,
Hey, they did what they
first
needed
off,
to do. Okay.
first off, my starting lineup is all beat up. All right, so I don't want to hear it. My two starting wide receivers that are all pro out 6, 7 weeks.
No, they made it happen. That I'll tell you what, I did watch a little bit of that
I,
game, but what changed it was that punt return. That was, but all right, well, we'll go ahead. It's all rigged, Leanne. I
that's
agree. It is rigged. They flipped
come
the coin for the
on.
Jags this season. They clearly they clearly lost. But all right, well, let's dive into it. Welcome everyone to today's session. Today's going to be a good session. Why? Because, well, we have our very own CEO and president of EPICompliance and Taino Consultants, Dr. Delgado here, with over 25 years of healthcare experience and healthcare consulting, IT. He's worked with hospitals, large companies. And today's topic, we're going to be talking about private equity compliance. And I am going to post a YouTube video here. The last webinar session that we did with Dr. Delgado, we did talk about Medicare advantages and changes. I'm going to go ahead and throw that here in chat. Um, but Dr. Delgado, I appreciate you being here, and didn't know if you wanted to add anything else to that.
Well, it's actually a pleasure to be here. I wish I had more time to spend sharing the information and what's happening because we are in a dynamic environment right now. It's kind of funny. I was talking with some of the bankers before, and I'm going to be talking to them after. And they're actually now creating line of credits and loans that are only 12 months because they say depending on what happened in November is how the rate is going to change. So they don't want to go any further than 12 months. But in a way, healthcare is different, but at the same time, kind of the same. Depending on what happened is whether we see more audits and less money, or the opposite may happen that some of the regulation will be slowed down. But that will not affect, actually, it does affect what we're going to be talking about, because the only reason we talk about investors is because there are people with money that are willing to jump into the healthcare because it's the one industry that they consider will not go anywhere. I mean, last 2 weeks, I was actually talking with a lot of people in different industries. And at one point in time, I had a Uber driver that used to be a financial analyst, and he was fired overnight. And
Wow.
then there are other people that have jobs of 80 grand or more that are being replaced by AIs. So the question is, okay, well then healthcare is the environment, but we're in healthcare and how do we get there? And that's why you will see the thing about the equity investor, the private investors, all of them looking at this thing. But the one thing that they also look at is that while healthcare is a great business, it's also one full of liabilities. So before they invest any money, before they buy, before they merge, even with the MSOs, before you join somebody else, which is basically where we're going, you gotta look at because they're going to be looking at, okay, how much of a liability are you, And is it worth it for me to merge with you, or am I going to increase the liability to a point that I don't want to take it? I mean, remember, we're talking about mandatory fines under HIPAA of $50,000 and more. We're talking about IRS doing audits. And I actually, in two companies, I have audits on the employee payments that we do. Now, the funny part was there was nothing wrong with it. It was just the IRS picking on small businesses. And then with the security breaches, while I was 2 weeks ago, I was in San Francisco, and on Monday, my wife gets into the computer, and somebody actually hacked into our bank account, business bank account, and created two other accounts. And the funny thing, the bank didn't notice. So just today, I got the letter from the bank finally saying we investigated and it's fraud and we closed this and we did that. Hell, my wife told you about that on 2 weeks ago on Monday, and it took you 2 weeks to take action. So what we gotta look at it is from the standpoint of compliance. And this is something that I tell people. I create the tools based on what I see is affecting the healthcare environment. So while most of the time we talk about HIPAA security, there are changes in OSHA, there are changes in human resources, there are changes on the Medicare compliance, all of that. But in terms of HIPAA security, something I say, use that for your own home. Think about it as what are you doing, what are you releasing? So now, first thing that I wanted to do is to define the topic, because the topic can go into multiple avenues, even dealing with compliance. So we need to define, okay, so we're going to be talking about, and I'm going to make it simple. There's a private investor, there's an equity capital. We're
Yes.
actually talking about somebody that wants to invest money in an office. What do we do to prepare for that? Because again, I have a lot of my friends that are retiring, or they sell their practices, or they join an MSO without knowing that they join an MSO. And actually, Jose and I are Jose and I are working in one case, and I'm working in an additional case. Both cases deal with similar things. In both cases, we're talking about a couple $100 million in fines, depending on what happened and how they move. So this is why I say, even if you don't do anything like this, and I have one doctor that basically lost his practice because he joined an MSO and he didn't know he was joining the MSO.
Yeah.
So the question is, where do we start?
Well, I mean, I would say if we're gonna go into something like this, I would always go and say, because I'm gonna spend the cash the same. If I own a practice and someone comes to tell me, hey, I want to buy your practice, I'm gonna spend the same cash, whether it's a hospital, an insurance company, a private equity, a venture capital, an MSO, another doctor.
Jose,
I don't care about
I,
that piece.
I think that's where we should start is you get approached by a venture capitalist versus a private equity. What's the difference? You know,
Well, I mean, in my experience, the package is completely different because
Yeah.
one private equity can do something, is offering something, and another private equity is offering the same amount of money, but they do it in a completely different way. So for me, there's a lot of intricacies. It doesn't matter what they call themselves,
Yeah.
right?
Okay, for me, I'm going to tell you more. The way I look at it as a venture capitalist is somebody that is giving you money to start a new business. That's basically a venture capitalist, because there's really not that much there. A private equity is equity means that there's something of value. So they are buying something of value from the business. But what is it that they are buying? So in this case, I will concentrate on the private equity, because the venture capitalists are just going to build it up. So they have to do everything. My private equity, there's something there. But the first thing that they do, even when they are looking at how much they're going to pay, is, and this is funny because one of the first requests that we get is, oh, we got somebody auditing our security risk analysis. And most of the time, but for Jose and me, this means, oh, I think that they're looking into buying. Or actually they're selling, somebody buying them.
It's usually part of the due diligence now. So if you have not done an SRA recently and you're looking to sell, it's not going to happen. right now, lawyers, insurance companies, they're looking at the due diligence, and the first thing they're going to ask is the SRA.
Yeah. Yeah, then after that, and again, this is very important because some of them will say, I just want to see the one from last year. But then one thing that we do that not too many people do, but it's required by law, is, okay, where's your security management plan? Because the security risk analysis is just looking at, okay, let me see what you did regarding HIPAA. And then based on that, I want to look to see, okay, so what is the plan to correct these deficiencies? So a lot of the SRAs and the SRAs templates, all they're talking about, this is how you conduct it. Very few of them, if any, says, okay, this is the security management plan. So we actually do the SRA, and then we go into the security management plan. This is what you need to do this year to fix some of these problems, okay? Now, the next thing with that is, and I actually was looking at some of the paperwork that I had from a previous involvement I had in buy sell. And the next thing that they do is look at, okay, who's your security officer? Who's your privacy officer? Who's your OSHA officer? Give me a job description for them. Because the fact that you have policies and procedures, well, they know that you can buy them. And we have audited enough offices that sometimes it's funny. I would say that the worst one for me was a package that they bought that they never removed from the package. So they had the binders and all the pages on the package.
I easily got one that beats
Never
that.
took it out
Okay,
of the
which one?
plastic, huh?
Old enough to where it had the perforations from the paper on the printers back in the 90s that you would peel off.
Yes.
And it had the name of a different office. And that provider never worked for that practice.
Well, that's true. But then I have one more.
So that's
I
a
think that
friend
this
of
one
that's a
actually-
friend of the provider. Here, just
Yeah.
take this.
Yeah.
Now, I have one that I audited, and when I look at the forms, they copied them from another client of mine. So they stole
That's-
my own proprietary information and they were using it in
That's
the office.
funny. That's funny. That's not bad. That's funny.
Yeah. And I say, wow,
Did you ask them where they got it from?
I knew where they got it
Well,
from.
I know, but I want
No,
but
it's
to
just
see if
that-
they coughed up.
No, they were so
That's-
stupid that they forgot to change the name in some of the forms and the
Well,
policies.
And they
So
paid
it
for your
was-
services on top.
Wow. But again, the
That's,
thing
that's
is,
funny.
that's why even the Office of the Inspector General, they say that no longer having just policies and procedures is not good enough, period, because they have gone through all of this and I have audited enough offices to that. So that's why the private investors say, no. I want to know a job description of who's doing this. I want to know when they were done. And then they start looking at the policies and procedures. So they go audit the SRAs, they go job description, they go who is the person, and then they go into what actions they completed, and then they start asking what were any breaches, any incidents, anything that happened. They want to see that.
They want to log. Now,
But-
you mentioned it earlier. Are they generally, I guess, private equities that are looking to buy? Are they I think you mentioned it, but are they really just looking for 1 year back? I would imagine they'd want to go way further.
So
than
it all
that.
depends on what they're trying to do, right? Right. So
Yeah.
there's some that are genuinely trying to increase their footprint to run a practice, right? They always say they're doing that, but if they're doing that, they want to know where all the skeletons are buried because they're
Sure.
picking up all the liability.
Sure.
There are others that the game is, I want to have under our umbrella 30,000, 50,000, 100,000 lives in 12 states, over 50 offices, so they can flip it to an insurance company.
Right.
I see.
So they may be giving, and this is what we're seeing a lot. They're offering a lot more money to the practice than what the practice is actually worth, because they know that they can 10x what they're going to get.
Oh.
They can do their 10x on in a year from now or 2 years from now. So it really doesn't matter to them that they're paying up front. What matters is usually the people that are on our podcast are the ones that are left holding the bag one way or the other.
Yeah.
So you've got to figure out by what they're asking, whether the juice is worth the squeeze to stay or not,
I see.
and make it complex for them. Because if everybody's going to be getting paid, you might as well too, right? So one of the things we've seen a lot of is, especially on the flip scenario, they'll come in, they'll cut to more profitability, absorb some certain aspects of the business that are that they can shift costs over multiple offices, like HR, like compliance, like IT. They do it poorly, they do it on the cheap, because all they're trying to do is keep the practice afloat long enough to flip the thing.
Yeah.
Sure.
But if you're in the trenches, you're the one sitting here saying, hey, all right, cool, all of a sudden I don't have to do this, but I need this, or I need that, oh, I hired this person, oh, what about that, oh, wait, we just switched our payroll company, now I need to go and find out where this is.
Right.
So there's a lot of situations here that the sale in and of itself, it's all ink on paper, it's all money to the ownership. But if you're one of the key personnel in the business, the new owners are going to be asking a lot of you before, during, and after the sale. Right? So you got to figure out, is the juice worth the squeeze on your end?
Yeah. So now one thing that actually has helped us is that if they are EPICompliance customers, everything is there. And if they follow the monthly task, then it's easy for us. I mean, it's relatively easy for us to say, okay, we got everything here. We can put it here, put it on this format, give it to them. So it actually saved months of work, because the last one I was dealing with, it took me almost 3 to 4 months to put all the documents together to show them we are in compliance, all of these liabilities not there.
Well, as opposed to a year and a half where it didn't even go through.
Yeah.
Well, in the EPICompliance system, I mean, that alone, the tasking, but also in that tasking, it'll ask you to designate who the compliance officer is. It's keeping log of all those things. And I know this wasn't mentioned, but I can only assume as part of the due diligence that this is involved, but I'm sure they would want to see that you have business associate agreements in place with vendors. That's got to.
Most of them don't. Most of them are going to want a vendor list just to know who they're dealing with. Most of these sales people that are coming in to buy your practice, they're not going to ask for that. Maybe a few of the lawyers do. I usually see the accountants ask for more of that shit.
Yeah.
Huh.
Well, again, I've seen them asking for the business associates. They don't
ask for a
dive
full
too deep.
list. They're just like, okay, this is the list. Let's move on. You know what I mean? Like,
I see.
Yeah, because these equity investors,
Checking off the
more
boxes.
likely they have somebody where they want to funnel their business to. So the
Sure.
fact that you had your IT, you had your compliance, and all that, okay, good, I don't care.
yeah. So if you are a vendor in the healthcare industry and you're a small local guy, private equity and venture capital and hospitals gobbling everything up are the worst thing to happen to your business.
Yes.
Because they're how can I put this? They're CVSing you, right? Like they literally, you don't see many Walgreens anymore because CVS just hopped in, literally took it over, switched out the signs, turned on the lights, moving on. You know what I mean? So so when you're an office manager, you really want to make sure that you are having those conversations, or that ownership is having those conversations with you, right? Like if ownership wants to do this properly, and let's say that they want to keep working, they should be incentivized to not just look at the check that they're handing over, but what that environment is going to be like. Because a lot of these private equities and these venture capitals do not care about your company culture.
Yeah, that's true.
They don't care about what your work-life balance was. They only care about what it's going to be.
But let me roll it back, because this is really where we want to get into. The number one thing is, by law, you have to do all of these compliance actions that are the minimum that they require proof that they have been done, okay? So that's by law is required. Number two, the fact that most of the people in this call, if anything happens, even if you are not owner, you are gonna be liable for it. So that they have to do those things that we're telling them, and we're giving them the tools to do it. So there are no excuse to do it. But number three is that because the environment is changing, more healthcare providers are looking at getting out, and their vision of getting out is I sell it and I do something else. They don't realize that, and maybe not nothing else for you, you're gonna have to come back. But I have talked with physicians that right now, based on the situation, they say, I close my office, I'm gonna sit down to see what happens. And then I'll decide what I'm gonna do. So they actually are taking a lapse on practicing 6 months to a year. It's crazy. I never seen that. But the other thing that I have seen is that nobody really, very few people can afford to retire. Because, okay, fine. How much is a primary care practice worth? How much is a dental office worth? How much is a chiropractor office worth? And I can go through the list of all of that. And the answer is the answer for all the questions. It depends. I have bought offices for 20 grand, primary care offices, but I know one that wasn't even different from the 20 grand than somebody paid 2 million. So it's the perception. It's what is the perceived
Patient
value
count,
and
too.
what is the risk. When you
Yeah.
look at the risk, that's where you see, no, this is too risky. They are doing too many things that at any point in time, anybody can die. Or they are actually being watched by the OIG or the Medicare. I'm going to walk out. I mean, I have one case just 2 months ago, somebody that Medicare did an audit, and before they came in, they were proactive. They looked into it, they created a plan of action, all that. And even with all of that, it cost them over $200,000. And then was the only thing wrong was one of the providers didn't keep up with his credentialing. So this goes back to Medicare compliance. There are some of the basic things that I have one case that I had to go all the way to CMS in Washington because what the government is doing, they're sending email. They don't send certified letters anymore. They will send emails based on your profile. But what happened? Well, the office manager was the one that created the profile, but that was number 5 office manager. There have been 5 office manager after that. So who have the login and password? Nobody knows. So when Medicare sends the
Good
note,
luck getting that reset.
yeah, when Medicare sends the note, it says, well, you never responded, so you're not in compliance. So now we found you guilty. Plus, now because you say that you were doing this and now you have committed fraud, now we get into the actual mandatory fines. And then on top of that, you got to pay interest. So in this one case, I mean, the practice actually, there is 3, 4 doctors now. And if you talk with the office manager, she actually will tell you, Dr. Delgado saved our practice because we're going to have to close and nobody else. Then we're going to basically blackball all of them for fraud and all that. And say, wow. But I was able to go and present a case that I should have not won. I tell you that much. But I pull it out of the hat. So it goes back to what we're trying to do, and I go back to the EPI system. Everything I have there is based on not only the law, but also the experiences that we have nationwide with all of the different healthcare providers and organizations and trying to protect our clients. So we are, and you know it well, that we are investing money ongoing into changing the software to make it easier for our people, and I say our people is our customers, to be able to have the system do more things for them and document more for them so that when because it's not if, when something happens, we can jump in and help them. And at that point in time, and even for all of the administrators, all of the office managers, all of the compliance officers, those are the jobs that an AI cannot replace. So I was just interviewing a doctor yesterday morning, and we're talking about money and numbers and all of that. And in this case, I will tell you a lot of details. But as a listener, based on what you are and all that, it may be anywhere between 150 to 200 plus a year, the salary. and I'm talking thousands, okay, 150,000 to 200 plus thousand, you may get to 300,000. And I say, but if you were a HIPAA security, those jobs start like in the 70,000 and they go past $400,000 a year. Because the government requires that there is one person that does it, because it's very difficult to do it, because even the big organizations are realizing that if we don't have a compliant officer, we're in trouble.
Well, let's see what happens with Change Healthcare and Ascension, because those are big cases, and I'm waiting to see if their security officer pops their head up so they can get whacked. They're not.
It's funny. It's been an interesting year for the cybersecurity.
They're not going
in
to
general.
stick their head out.
Oh, no. This is by default, they're going to get hit.
Oh, yeah.
And basically what happened with those security officers, they pull out and then they find a job somewhere else, even if they are blamed. But the organization is going to have to pay a big fine, and they're going to have to do a mandatory. Well, and this is the funny, it's already mandatory. So when they find that you are supposed to do something, you don't do it. Part of the resolution, they say, not only now do you have to do it, which you had to do it all along, but now we're going to add somebody that is going to be watching over you, that you have to send the documents to prove that you are doing it. And in addition to that, you have all of your fines, and then you also have to do training. So when I have, and I do this thing quite frequently, I look at all of the cases that have been settled. And the standard is you have to conduct a HIPAA security analysis, an SRS. Number two, you have to update your policies and procedures. Number three, you have to train all your people. Number four, now on a monthly, quarterly basis, you have to send us proof or have a third party looking over you to make sure that you are doing all of that.
At the expense of your
At your expense.
Yeah.
And then, of course, number five is how much do you have to pay in fines? So that's what the venture capitalists and private investors, I don't want to carry that monster.
No.
But when you really look at one back, okay, through EPI, we remind them to do their SRAs, and then Taino Consultant does it for them, and we upload it on EPI. Okay. Through EPI, we update the policies and procedures, plus remind them what are the actions that they have to do on a monthly basis, plus give them the documents to put it there so we can prove it. Wow. Through EPI, we provide the training. Okay. So the only thing that we don't provide is the money to pay the fines. Okay. And I don't think we will be going there. But the idea is everything you need is there. Help us help you. Listen to what we're trying to do so we can help you.
Also, if you're looking to get out of the market and sell, remember this is just like buying a house.
Yeah.
Get your stuff in order 2 to 3 years ahead of time, because if not, you're going to be paying consultants, accountants, and lawyers about a Hyundai, maybe a small Cadillac, maybe a small Tesla worth of money to get everything caught up. So it's easier to just keep it all nice and clean. So if you're thinking, hey, it's a 5-year exit strategy, okay, you got 2 years to mess around, then those last three, everything's got to be clean. Your book's got to be clean. Your compliance has got to be clean. Your training's got to be clean. Everything's got to be clean. If not, it's just going to make it so much harder to get the deal to actually go through. Because it's one thing for the sales guy to come in and say, hey, we'll buy your practice for $400,000. And then after everything and the due diligence, they're like, yeah, it's really worth 50.
It's worth this.
You know?
Yeesh.
Yeah, welcome to the used car market. You know what I mean? Like everybody gets that letter, hey, we'll buy your car from you 4 times what it's worth. And then you show up and you're paying me half of what Kelly Blue Book says, you know? So it's the same thing. It's the same exact thing. It's just in healthcare rather than your car, rather than your house.
Yeah. Now, there's other things that we could talk about about how they buy, what they do, the role, but that would be going into other legal issues that may vary from state to state. So, or even from
company to company.
That was actually a question I wanted to ask is, how would you advise organizations that are maybe looking to sell, that maybe have gone through a state inspection versus a federal? And
my first question would be, are you looking to work after the sale? If you don't care, cash spends the same, whoever
Sure.
it comes from. Like, if you don't care, then screw it, right? If you care, then you have to be a lot more careful with who you get into bed with.
For me, it's actually different. I look at it and I tell some of the doctors this, and they don't listen. If you go to sell to an equity investor, private capital, whatever it is, the problem is you're going to get a lump sum that is going to be maybe less than all the effort you put into building your practice. So most of the time I say, no, go get a new person, a new provider to work. Basically, help him grow to become the owner. And then while he's growing, he's paying you for the practice. So he's buying equity little by little.
Sure.
So by doing that, number one, you make more money, you get tax legs because it's throughout a couple of years, and you provide your employees stability. So they don't have to run and you don't have to fire them.
But see, this goes back to that same question. Do you care? Or do you just cash it out?
If
I'm just taking my chips and going home,
yeah,
then I don't care. I spend the cash the same.
yeah.
Right? Like, the taxable portion of it, that's a conversation in of itself. Because depending on the state, you could lose half the money. What's the
Sure.
point of getting $1 million if you're only going to walk away with half of it? California.
I see
Yeah.
Dr.
You know what I mean?
Delgado's scenario quite a bit.
But then-
for me, it's not the friend or somebody you know really well that you went to med school with. It's like your protege, your child.
Well, Ray, remember
Yes.
that. Well, so we're actually at the age now where kids that I grew up with
Right.
are looking at whether they're actually going to follow through with med school, which was the deal that their parents and them had, right? The problem is, whether it's your kid, whether it's your nephew, whether it's somebody from the street, can you even keep that person working with you long enough to set up this acquisition, this slow rolling acquisition? Do you have the time?
Yeah.
Some of these docs, yeah, the way they used to work, it doesn't matter. They slow down a little bit and they're so ready to rock and roll. Well, we got other ones that you see them and they're that 50-year-old jalopy on the road right now that you're like, how is this thing still running? Like, you hear it backfiring all the time. Rust, it's got more rust than paint. Like, it's so you have to take a look at and genuinely assess, where are you on that life cycle? If you're done, take your ball, go home. If you have the time, yeah, that's a better deal for everybody. The whole, hey, I'm gonna basically raise somebody in the business. It's an easy transfer. The patients like it better. The employees are used to the person. It's much nicer. But if you don't have the time, or they don't have the money, or they don't have the will to be an owner, because that's a completely different bag of tricks as well, that's not taught in med school right now, is how to own a business, or even
That's a
to
two-way
want a
street.
business. I mean, if you talk to a provider that's getting out of med school and just hop into the conversation with someone that went to med school, let's just say in the 90s, the ones from the 90s are literally laughing at the new guys just because of the way that they do rounds now is completely different.
Yeah,
Way
well, that's
different. It used
true. I
to be.
mean,
You know what I mean?
Yeah.
Like, the whole game has changed. A lot of these docs, I'm hearing it from people his age that are wanting to sell out now. They don't want to be owners. Well, then if they don't want to be owners and I want to go home, then you know what I mean? Like, this is the option.
Yeah, it might be easier just to sell the practice outright and get out.
Yeah.
Like
And
you said.
sometimes that's just the push.
Yeah.
Wait, do I want to be the boss, or do I want to have a boss? Wait a minute. You know what I mean? Like, sometimes that's the little push that they need, that, all right, no, let's figure this thing out. And that's where you have a banker come in, maybe helps them out, speed this whole process along. Like, there's a lot of different scenarios that you can do here, but it really is dependent upon, what is the goal of the business? What are you trying to do?
Well, okay,
Right.
let me jump in because there's a lot of that already happening, and I can tell you that a lot of my friends and peers are more in terms of they have that I would say, relationship with their patients, with their practices, their baby. But the thing is, at the end of the day, it doesn't matter what, it's all about the compliance and the risk.
Oh,
If
totally,
you
yeah.
don't do the things that you need to do, all of a sudden, whether you sell, you move on, or whatever, it could be of maybe all of a sudden you're going to lose everything and go to jail. I spent the last couple months defending one doctor that even the Department of Health wanted to take his license out. And I just finalized that deal on Friday, but he was going to lose it all. So it's like I say, there are different issues, there are different opportunities, there are different variables. Even when people say, I have no options, yes, you do, but where you don't have any options is on the compliance, the liability, if you don't follow the law.
So if
There's
I
no
sold
movement there.
if I was a primary practice, I sold my practice outright and just said, "Hey, I'm taking that ball, I'm going home." I'm
Yeah,
still liable, right? They're to an extent, or
Well, so
no?
that's part of the trick too, right? Like, so are they buying just the name of the business and the patient records, or are they just buying the name of the business? Like, you know what I mean? Like, there's
Sure.
so many ways to structure this thing. We've even seen it to where some of these private equities have quote unquote bought the practice, but on all the paperwork, it's still the providers that are on the hook.
right. Well, I tell you more. When I buy a practice, I don't buy the medical records. I become the record custodian of the records. That way I don't even have. But then those patients that are not active, I return them to the seller. Say, no, these patients are not active. I know I'm going to assume
It's your
responsibility
problem.
of being the record custodian for them. So now it's all yours. So even that plays a role because of HIPAA privacy requirements. What do you do with medical records? How do you manage? Who's responsible? That's a lot of money
Well,
that people don't
yeah.
think about.
And then
Yeah.
this is where you have that conversation of who's going to pay for my tail malpractice.
Yeah.
Yeah.
So your provider that's retiring or getting bought out, who's going to pay for that? Are you going to build that into the claim? Or are you just going to ride off into the sunset, not giving one duck, like what's the deal? So that's the problem, right? Like this whole next chapter of your business requires a lot more thought than salivating at the check that someone slides across.
Okay, but I want to bring it back because I don't know really who our audience is. So if I'm an employee, I'm the office manager.
Normally our audience has been office managers, a few compliance officers, so people in the trenches, not
Had a few-
necessarily business owners.
Had a few physicians on here, but
Okay,
yeah,
because what I want to do is bring it to what is important to them.
CYA.
Yeah, well, true. What is important to them, I will tell you, is the things that we're telling you that these investors, these buyers are looking at are the things that are required by law, are the things that means liability. So what we are telling you is the beautiful thing about it is that these are the things that we're telling you to do and that are already listed on EPI. So follow the monthly actions. I have created those for your benefit. I tell you is, I don't like to do more work than I have to. And I create everything, even the forms, in the way that I try to simplify and I review them. Like I'm just finishing the full review of the OSHA. And I'm actually starting to emphasize different sub business. So everything I do and we do is for your benefit. And this is another, I would say, spin of why you gotta do your security risk analysis. Why do you have to make sure that you have appointed your compliance officer? Why do you have to do the training every year? Most people understand the yearly training. However, if everything else is just as important, I would say that the SRA is the number 1%, because that's what, anytime there's an audit, that's the first thing that they ask for. Okay. So any questions?
if you guys have any questions, please throw it in the chat. I'm actually just running a quick poll. I'm interested to see the demographic here in this presentation today.
Okay, so what I'm going to do anyway is I'm going to create a blog about this conversation we have with a little more information. If they want to know more about it, more about exactly the documents, a little bit about and other than the compliance documents that they require. so people will have an idea if they want to know more about it. I will love to talk more about the composition of how is it, because if I'm an office manager, what's going to happen to me? We know one that went from office manager to administrator, and then they left and stranded and pulled out completely, and they didn't have any support.
Yeah, so I mean, and this is where I'll go back to this piece, right? During, at the very least, the transition period, it is the time in which, if you are an office manager, you have the most leverage.
Yeah.
So if you are going to be putting in all of those extra hours, there's no reason why you can't get yourself some guarantees, or at least know that, hey, all right, coming out of this, I'm not going to have a job. So then it's a conversation with yourself. Do I drag this out and take as long as I need to get everything done because I'm fired? Or is this something to where, hey, maybe I can negotiate a better package? You know, maybe the benefits are slightly different. Maybe I can get a little bit more money here. You know what I mean? Like there's a different scenario, right? Because a lot of these offices, a lot of these venture capitals are, and private equities, they're based out of larger cities. So their costs are, what they're used to cost wise is higher than where a lot of these offices that you see them buying up even now. I mean, you've got people buying up practices in the interior of Florida, where I can tell you honestly, it's not an exaggeration when I say the cost of living in the interior of Florida is half of what it is on the coasts.
Yeah.
Yep.
You know what I mean? Like, and depending on what coast and what interior, it could be a quarter to 10%. So it's something to where for you to go and say, hey, I want an extra $5,000 a year, or I want an extra $2 an hour, $5 an hour, you know, like there is leverage there. There is a limited window for that leverage. Right? We are here to help you guys out because I like to work with you administrators as much as I do with the owners, because the owners may be the ones that sign the checks, but you guys know where the bodies are buried. So we really got to have a good relationship when we're working, no matter what, not just with the client itself, but also with the administrator that I basically look at you guys like the custodian of the client.
Well, I'm gonna throw one more thing, and then I do have to go. I have to make a call before my next appointment. But this is the one thing that I see as well. Like I said before, I mentioned AIs, and AIs are learning, and they are gonna take over. And there's a lot of jobs that are gonna be lost. However, I would say the beautiful thing about it is that people that understand compliance, that understand where's the liability. There's not an AI for that. I was talking with one guy that actually have a company that is an AI, and I was trying to explain to him the sub process and what they had to look at, and he said, "Oh crap." He didn't say crap, he said something else. And that's why the experience that you are getting now, and I would say ask questions, learn the system. We're teaching you something that is not even taught on the schools yet. So that will give you the edge to become very valuable. Whether you are a provider, a dentist, chiropractor, physician, all of that is value. When I interview somebody and they tell me, oh, I know about this, this, and this, and they prove that they know, wow. But the reality is that most of the time when I ask somebody about these things, about compliance, about what we're talking about, what is needed, they don't know. They're just repeating what they are reading and they have no understanding of what it's all about. So your webcast guys are helping our clients in other issues in terms of becoming more attractive for any position, plus helping the business where they work in a way that nobody else is doing. Okay. With that, if there's one last call, if anybody have a question for me, raise your hand because I gotta go and take care of the call.
Next week we're doing Tracy's
I think
suggestion, right?
Tracy's in here as well. Or no, yep, she's in here. Yeah, Tracy actually suggested us talking about as a HIPAA privacy officer, what's the importance behind record keeping. which kind of goes hand in hand with this subject.
Yeah,
but
it
we'll
does a
sort of-
little bit, but yeah, we'll be diving in more into that one next week. So don't worry, Tracy, get your pen and paper out. Believe it or not, for HIPAA privacy, it's a lot of common sense, but common sense is superpower. So
We
don't
tell
worry,
you.
we'll knock it out.
Okay.
No,
Okay, guys.
Dr.
Nice
Delgado,
talking to you.
appreciate you being
You
here.
have a great day now.
And appreciate everybody's attendance, and I look forward to seeing everybody next week. I did post our YouTube channel here in the chat. If you guys haven't subscribed already, please do. All of these videos are recorded and will be, end up on our YouTube video. If you have any colleagues that you'd like to send it to, please feel free to share. We've been doing these since October of last year, so there's quite a few in the list. And I did put Dr. Delgado's contact information as well. If you guys have any questions that you'd like to direct towards him, please feel free to send him an email. Other than that, Jose, it's been a pleasure.
I mean, that's all I've got for today. So
No worries.
stay dry, everybody. If you're in the path of that little hurricane coming through.
Lord. I hope it doesn't curveball.
I mean, we are on the back end of that cone. It's got a really hook shot to hit us.
I've seen the latest trajectory. We look okay. Obviously, we're gonna get a little bit of rain from it, but hopefully it doesn't, the super
If you're in
curve.
Florida and you need anything out of Tallahassee, any government office tomorrow, assume that tomorrow is your last day for the week, because they're gonna be on like shutdown. So
You know how it's going to be between today and tomorrow. They've already talked about it on the local news here. People are going to be buying up the waters, filling up the gas tanks.
Yeah. Hurricane party.
Yeah, that's what it is. That's what it is, man. Still waiting on him.
Oh, no. Don't worry about it, Leanne. You go keep waiting. Assume that now, especially with ACA, assume that that's not happening before the election. So, but that's a whole nother bag of tricks. So we'll talk soon, guys.
Yeah. Thank you, everyone. Appreciate it. Take care, Jose.
Bye.